Good morning to all traders and welcome to another daily market insights video provided to you, of course, by Orbex. This is Stavros. Today is Tuesday, the 4th of June, and dollar's weakness seems to be letting all majors reaching fresh highs. Of course, with gold and dollar being the main beneficiaries, as everybody would have spotted already. And one would assume that now that RBA has cut rates early in the morning, the AUDUSD would fall. But instead, we see the pair surging higher up. It seems like, to me, investors are more worried about Fed following up next with a cut rather than RBA's decision, as at least RBA purely cut interest rates to support employment, whereas if Fed did, it would be a whole different story, as it would increase fears of a recession, and that would pretty much validate that the US economy is more damaged by the trade war than China is. So on the calendar today, we are expecting some data from Europe, unemployment rate, as well as the core CPI. We have some data from the UK, and that's why we're also going to check what's happening with the pound. And of course, then Fed's William and Powell's speech, and later in the evening, factory orders and also New Zealandian data, GDP price index. So I want to start, as you probably have realized, with Aussie dollar. Okay, Aussie dollar has been, I think it has completed its corrective move to the downside. We've had a zigzag over here to the upside, then we turned negative. We had an ABC, and then we have this combination of an ABC, and since we have a good confluence level here, this is the 100 extension of the first wave, and this is also the 100 extension of 161, sorry, and 100 extension of this first wave to the downside, the second zigzag. Then we're probably looking at prices start reversing now. So for that reason, and because we see signs on the RSI and MACD, I am going onto this scenario, supporting this bullish impulse scenario. So this is considered to be in the longer term an ABC. It could be turn out to be a corrective ABC. Okay, so we should be looking for prices now to complete the C wave of this irregular pattern. Of course, in the medium term, down, we could go a little bit lower on the 60 minutes. I would say it's a short term. We see this impulse wave to the upside. Wave 2, 3 is expected to end or have ended, and then we should be getting a correction, and then prices should start heading back up. Probably to the top of this move. So the first level to look at, of course, is the 70 cents. The second one would be the 71 cents in the medium term. On the RSI and the MACD as well, we see some divergence here. So I would expect prices to start correcting fairly soon. But nevertheless, I'm expecting these the prices to break outside this ascending channel anyway. So if we go with, of course, breaking below this level, that would invalidate the whole scenario. And most likely, we're going for another move to the downside before bulls start stepping in. But this could be the point of reversal everybody has been expecting since the end of last quarter. Now, when I go also on the pound quickly, we've got also a zigzag pattern here and also another zigzag down here. The thing is that we haven't even went down to complete the 161. We broke below the 100 extension over here, but I feel there is a bit more space to the downside for pound to complete another wave to the downside. That would complete the impulse to the downside. That would be the last of the zigzag zigzag wave to the downside. I'm getting some supportive signals from both RSI and MACD, but as you see, there is some contradiction here by both with a larger signal as well, let's call it stronger, and that is why I'm still expecting both MACD and the RSI to allow prices move a little bit higher pretty much. I'm seeing this 127 because it's a good psychological as the place where we can start looking for validations and signals in order to start selling, not selling, in order to see whether the last wave to the downside will be coming through. Now, this sell signal will be a very short one, very short term, okay? And then we can probably start looking for buys as well here. That will be, of course, validated down the line because it's too early to say whether this is a reversal for the pound or not. This move we see here is purely dollar weakness, so I'm not really convinced. In case we move down, of course, we can look to, if we look to completing this to complete this C as at 1.61, we're looking at 1.235. Also a very good psychological level. And down on the 60 minutes chart as well, quickly. So this is an impulse to the downside, and as I said before, you know, I'm seeing that price is moving a little bit low. Now, this is just a scenario, potentially. We could get this as an A, B, C, D, E, and prices should be breaking below, okay? Below this side. Of course, if we move above that level, that would invalidate this scenario, and we could be looking at moving even above the 127 level, probably looking at going even around 128, 500, and then start looking for further close over here. But in the short term, and if the 127 holds firm, of course, if prices get there, then I am more bearish on that scenario. We do get two signals on the MACD and RSI on the 1 hour chart. There is some room to move to a little bit higher, and that's why also the some very, very short-term bullish scenario could also play in. So that is for the two today. I would pay attention, of course, to the European data as well, and later on Fed's speech, they're going to move the markets. So for the day, this is going to be it. I want to thank you for being with me here for another day. If you like the video, please show your support by liking the video. I recommend that you keep an eye, as always, on our blog, is where we cover the latest news, publish trading ideas, and provide all the necessary tools a trader needs.